The S&P 500 and Nasdaq reached new record closing highs on Monday, capping their best quarter in over a year as hopes for trade deals and possible rate cuts ease investor uncertainty. Both indexes ended the quarter with double-digit gains. Trade deals with China and the UK have fueled optimism that an all-out global trade war can be minimized, with hopes for more deals to be reached before President Donald Trump's July 9 trade deadline.
Clearly, the Middle East situation kind of having died down, especially last week, is lending a little bit of credence to the relief rally construct. I expect that to kind of be a very fluid situation. Should that dynamic change in the Middle East, we could see a little bit of a scare spark things again. But in general, I'm expecting anything that's positive and constructive to be fed through into the stock market as well as bonds. With regard to the Fed cutting rates, one of my thoughts is that a lot of the noise has started to come out with regard to sooner cuts rather than later. I'm a little skeptical of that personally because I think the inflationary environment could ramp up again, as we saw on Friday with the PCE data moving slightly higher, 2.7% away from the 2.5, 2.6% area we had been in of late. I'm expecting a little bit of a challenge for inflation going forward, and I expect that to kind of come more to fruition as we move forward into the year. Therefore, I'm not as forward thinking with regard to the Fed being on their front foot with cutting rates more aggressively rather than less. A lot of people are suggesting a September cut is in the mix. It certainly could be, but at this point, I don't see that happening. I'm only expecting one cut at most this year.
The end of the quarter was also influenced by managers operating stocks who make their financial statements or portfolios look more attractive at the end of a reporting period.